good evening, it's Real Fazal here, market analyst at CFDs.com, bringing you a review of US markets after they've closed. It's currently 11 PM here in UK time, so just going over and reviewing the US markets. Now this video is being brought to you by CFDs.com, a broker experienced in CFDs. Okay, so be sure to obviously claim that potential bonus of up to 25% and explore the other products and services on offer. Alternatively, you can go to the educational site www.cfds.education and certainly learn more where I post my analysis and charts daily. Okay, let's try and review the actual price action in US markets. We did have a late. I was actually short the Nasdaq into the close, and little did I know that the chart of Google would certainly rip raw post earnings. Now the earnings were very spectacular, and that will certainly bode well going into tomorrow. Now if I just bring up the chart of Google. The reason why I shorted this, shorted the Nasdaq and all, because we were into gap fill, and the market obviously has rallied from the pivot low, where previous resistance equals support here at 675. It's pushed higher from 675 up to 750, 760 into gap fill, and after hours it's trading above at 813. That's very impressive. Okay, so very impressive. So we've basically made a new high. If you go to the weekly chart on Google now, and you'll see that we've basically made a new high on Google, and we've traded above the previous resistance at 780. So that certainly is bullish for the Nasdaq in general, and that should obviously help overall risk sentiment as well. Now, having said that, if we bring up the chart of the Nasdaq and base that upon the economic data that came out today, you can see that we were or attempted to hold resistance at 4300. The daily chart on the Nasdaq has an inverted head and shoulders formation. Now, spectacular earnings from Google basically will serve and add more fuel to this fire, which is the inverted head and shoulders. Now, the inverted head and shoulders had a target of 4,400, given the head is at 4,000, the neckline is at 4,300. Sorry. A neckline is at 4,300. So we basically have a target of potentially 4,600 actually, gap fill, which is 4,600 in the long term. So again, be open-minded and realize there is a possibility of that occurring. Okay. Now the economic data out of the US was absolutely dismal, to say the least. Given the fact that we had the consumption side of the equation posting gains last Friday, now. That obviously wasn't confirmed today. Now, given the fact that we had, if I just bring up the data now, you can see personal consumption expenditure 0%. Okay, personal income, yes, that savings certainly increased, but the consumption side of the equation is not. It's not certainly bearing fruit. Now, personal spending, personal income, yes, 0.3%, but personal spending 0% flat. Okay, not only was that flat, the actual market manufacturing PMI came in weaker. And the ISM prices paid came in weaker, and also construction spending came in weaker as well. So certainly not confirming that the consumer, as we all know, consumption contributes to at least 70 to 80% of GDP. So it's very important that the consumption side of the equation starts to get going in order to obviously increase products and services that are on offer and that are sold, and obviously that creates jobs, and obviously that's the economic spiral. So that certainly wasn't the equation, or certainly did not occur. So we had weaker US data, which generally would signal a risk off tone. Okay, now that did not occur because individuals or traders basically it was the bad news equals good news, i.e. Bad news economic data is so dire that the Fed has no option but to keep rates on hold. Okay, and that obviously then triggers the QE trade or the potential stimulus trade, etc. So the Fed are potentially, rather than pushing back, I mean the actual potential of raising rates, they could potentially even go into negative rates themselves. Okay, so they could reverse the whole rate increase itself. So again, that's interesting, especially with regards to Fed Stanley Fischer. He was certainly encouraging the fact that the situational scenario at present is quite dire in terms of deflation and the deflationary threat that's posed from China, from Japan, etc. Because with Japan obviously introducing negative rates, then that deflation has to be exported elsewhere, and it's a zero-sum game, so obviously it comes into the US. So they can't afford to be hawkish now, because they will import that deflation, and the US will be suffering. So again, it's a zero-sum game. It has to go somewhere. The Chinese are obviously attempting to devalue their yuan, potential talk of rate cuts there, and negative rates in Japan. They've created a shield, and they've certainly shielded themselves. So it's going to be interesting. Now, we do have the RBA out overnight as well, and the RBO is going to be quite interesting, to say the least. So again, it's central banks basically gone mad, and everybody is attempting to play this currency war. How it ends, nobody knows, but it never does end well. Okay, so that's the backdrop. Okay, obviously we had the Chinese markets down overnight. We had the Nikkei higher overnight. We had weaker Chinese data. European data was certainly mixed to a large extent, although UK data came in strong and German data just slightly beat, but the markets were not embracing that. We did have Mr. Draghi's comments as well. Okay, so we have Mr. Draghi's comments of pro QE, and that certainly helped the risk trade as well. In the next 24 hours, we are going to see the big bellwether known as BP report its earnings, and that will certainly dictate sentiment go globally. So it should be interesting to see how the markets respond to that. Now let's go to the technical side of the equation now, and let's have a look at the actual markets and how they're positioned. So let's bring up the chart, the S&P 500 and the Russell. So first of all, the Russell, as always, Russell closed a gap on the 10-minute chart, you can see, and started to sell off. So therefore, one of the reasons why I wanted to short the Nasdaq. You're into gap fill on the Russell, and therefore you are into resistance. The 60-minute chart, again, it is a green candle, but given the fact that we had weak economic data, although having said that, the US market certainly did hold the neckline support, so that certainly is an encouraging sign. If we could stay above that neckline support, the inverted head and shoulders formation has legs, and therefore you are looking to propel yourself higher. Again, Google earnings certainly helped to a large extent, and we shall see. And obviously, Draghi certainly helped to a large extent as well. Mr. Fisher certainly helped the risk trade as well to a large extent. So again, we shall see. It's interesting to see if the markets interpret bad news as bad news, then we go lower and we break this inverted head and shoulders neckline. If the markets interpret bad news as good news, i.e. rate hikes delayed and the potential for negative rates, then obviously you are going to see a rally in equity market itself. So all eyes on the Russell itself and that neckline. So the bullish engulfing candle from Friday certainly holds on stronger consumption side of the equation, although it was tested today. So again, certainly some slight concern there. But again, we have multiple gaps that need to close above, and the bias certainly looks as if it's bullish for now. Okay, given the bullish consolidation. Now look at the S&P 500. Bear with me. I'll also bring up the S&P. Okay, I don't have the S&P over here. It must be further up. There we go. Okay, so the S&P 500 now. Again, like I said, the same scenario with regards to the S&P. Certainly very bullish, stayed above the neckline, so very, very impressive. Looking at your daily chart, obviously you've broken out the symmetrical wedge pattern. You've consolidated in the upper part of that green candle. So again, certainly all good positive signs for the bulls. Now, in terms of the S&P, we do have this solid resistance zone at 1948, if I'm precise. So again, then we have 200 MA above. So certainly is into resistance, the US market. Although having said that, the inverted head and shoulders target is 2003. And we do need a catalyst. Google certainly is one. Obviously, negative rates in Japan certainly is another one. Fed, Mr. Fisher, obviously being dovish again, certainly is another one. So we shall see exactly how BP reacts tomorrow, and obviously other economic news flow that comes out. Okay, so all eyes on the inverted head and shoulders formation on the S&P 500. But bear in mind, for now, we are into resistance, as you can see in the 10-minute chart, and you are certainly exhausted. Any pullbacks will go back to the 1920 level, potentially 1936 as well, and we have 1922. So again, 1920 will be the key support level if we do get a retrace. Okay, let's bring up the chart of the Wilshire as well whilst we're here, so it's very important. Wilshire still has the inverted head and shoulders formation, although having said that, now it is coming into resistance. Okay, so we certainly have a resistance zone here, and that level will need to be watched very, very closely. Okay, again, resistance zone coming up shortly. Right, okay, now the Russell 3000 as well, because I always cross verify with the Russell 3000. Look, bringing up your daily chart. Now Russell 3000, yep, daily chart certainly is looking good, i.e. consolidation. The 60-minute chart certainly is coming, looks as if it is coming into resistance. So Again, resistance at 200 MA, so certainly exercise caution here unless we get an overtly bullish argument. Okay. Now, in terms of oil itself has sold off after hours as well. Certainly is remaining weak on the day, as you can see here, bearish engulfing candle. If you look at my video yesterday, in my European video, you can see that I did expect the price of oil to certainly fall, and that certainly has obviously transpired. Now, we are coming into support. We are going into support on the 200 MA. The 4-hour chart as well, certainly pulling back here. You do have support down at $30, so again we have to keep a keen eye on there. Asian markets will be very important tonight because the Shanghai has the 200 MA that it will be potentially testing. If it can hold that 200 MA on the weekly, then we certainly have a bullish argument. The bullish engulfing candle from Friday certainly has held us far. We had an inside day today. If we can continue with that, and certainly is promising for a potential reversal on the gap fill that needs to close above. The weekly chart, like I said, you are near the 200 MA, and therefore you are looking for a potential short squeeze. So all eyes on the Aussie and Kiwi overnight, and obviously risk in general, especially with regards to oil. The daily chart of the Nikkei certainly looks like it's exhausted to a large extent, given the fact that we've bounced almost 2,000 points off the lows. So how far can it go? That's the question you need to ask yourself. Is it due for a pullback, a healthy pullback? We shall see. Okay. Understand. Okay, so going back to the actual Nasdaq now. Let's go back to bring up the Nasdaq now. The semiconductors themselves. Let's just bring up the daily chart. The semicons. The semiconductors, you are potentially into resistance, although you do have multiple gaps above to fill. So all eyes on those gaps and see how the market responds. Again, it's still a bullish formation, given the fact that you have this inverted head and shoulders, and then you have gap fill above. So Google will certainly help these indices. Nasdaq Biotechs again built a base in the 60-minute chart, looking to propel higher, and obviously Google is certainly going to help that cause. So certainly very bullish in terms of Nasdaq, and looking to potentially go higher. Okay, so in terms of the Dow Jones now, let's bring up the Dow itself. Dow on the daily chart. Certainly is coming into resistance on the Dow. We've certainly consolidated even with such bearish data again, so I need to pay respect to that. We are still above the neckline, so therefore buying still remains bullish, although you do have two resistance zones to contend with. The Dow Transportation, let's just see how the Dow Transports behave today. Okay, the Dow Transport's very bullish. You are now into that 200 MA, so you are looking at potential resistance for now in terms of the Dow before we get into a potential pullback. So that certainly needs to be respected. Any pullback, again, like I said, you are looking at remaining within this, what should we say, bullish formation, or rising contracting wedge. I mean, we shall see. But for now, certainly is looking bullish for a potential pullback, and then we are looking to potentially move higher. As you can see in the daily chart, we are testing that upper channel resistance line, and again, it will be tested overnight. The Asian markets, again, can push higher and break out, then you are looking at a potential breakout on this index too. Okay, so it's going to be very crucial as to how the markets react tomorrow. Now, the economic data out in the US session tomorrow: Redbook sales, ISM New York, economic optimism. Again, they are the main drivers. You do have oil inventory data, so as we all know, Mr. Fed George is going to be speaking, so again, that's going to be important. So certainly short-term pullback, and then looking for a potential move higher. In terms of the VIX, let's just bring up the VIX. The VIX as well is holding support at that 200 MA. Obviously, we've had this gap fill, and therefore looking for a potential thrust higher on the VIX as well. The 10-minute chart started to show some life, so again, certainly need to be exercising some caution here. Previous resistance equals support. Again, you are looking at a potential bounce in the VIX. So therefore, conclusion is short-term reversal. Looking to pull back. Again, keep an eye on BP. BP will dictate everything from my perspective. Now, the energy sector, as you can see, is showing weakness already. Have failed to make a higher high today. It's actually putting in a lower high in the doji, and therefore you are expected to potentially make a move lower now. And you do have an unfilled gap below that needs to close here. So again, BP earnings, which are expected to be weak, will obviously put a negative slant on the actual FTSE itself, and that certainly needs to be taken into consideration. From my perspective, I think I'll be a buyer of the dip if the Asian markets are stable and bullish of the Nasdaq itself, because it's been led by Google. Okay, I think that's a market wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.